It's getting serious for IoTeX. Why do I say this? Because I've run the numbers. I've run the statistics. We can look at various charts over here, various simulations of buying and selling the IoTeX token. And backed with that data, we have to do the following in order to buy low and sell high. Hi, in this video we're going to look at a strategy that helps us outperforming buying and holding the IoTeX token. So over here in white we just see the IoTeX price, in red we see the outperformance, and that does include trading fees. So 0.1% for buying and selling on Binance is included in this simulation, in this backtest. Now here's the fundamental idea of the strategy. It's pretty straightforward, but it's all about optimization, right? It's all about using an approach that worked in the past. So over here we've got the IoTeX price in US dollars, and in red we see a simple moving average. And we can change the duration of that moving average, right? We can basically tell the moving average how much data do we want to get averaged out, how quickly do we want this moving average to react to the price, right? The shorter we go with this moving average, the quicker we react. So the faster we might potentially want to be in the market, and the faster we might exit the market. The longer we make this moving average, the less reactive we are, but also the less trades we potentially do. Now, the idea is that we want to be in the market when the price is above the moving average, right? We want to follow the trend movements, because when we look at this in the grand scheme of things, right, over several years of IoTeX price data, we can see that the price moves in waves, right? Why not buy when prices tend to increase and sell when prices tend to decline? The reason why we want to make this kind of active trading, the reason is this incredible volatility of IoTeX. Here, look at this. From top to bottom, we face around 97% of a decline. So basically an entire destruction of your capital. On the other hand, right, when you time this right and you buy at the bottom and you sell at the top, you make almost 6,000% in profit. And this is only looking at the very grand trend, right? This is ignoring these kind of dips that we get in between, right? This is also very, very significant. Look at this, 80% drop. So let's try to time this. Let's not just buy and hold. Let's take advantage of this volatility. Now, first of all, I want to make clear what I'm actually talking about here when looking at IoTeX. IoTeX has two kinds of tokens. I'm going to talk about the Binance listed IoTeX, so the token that's currently at 9.2 cents. When we look at the version listed on Coinbase, that token is currently at 10.2 cents. So there is a difference when we look at both exchanges. So the Coinbase price divided by the Bitcoin price, we do see quite a bit of a divergence. At some point in time, we almost had a 3 times higher price on Coinbase versus Binance. So these are different types of tokens. One is the native token, one is the Ethereum ported token. So in this video, I'm going to talk about the Binance-based one, the token with most trading volume. Now, when you follow such a strategy, right, of buying when the price is above, selling when the price is below, the question is, what's your best duration, historically speaking, for doing such an approach? And without including too much fluff talk in this video, let's directly jump into the results. So historically, the 29-day exponential moving average worked pretty well. So here in white, we see the IoTeX price. Here in red, we see the performance when we traded according to this exponential moving average. So what you can see over here is when the price declines, that sometimes we are simply outside of the market. We are completely in cash. So that's when a strategy assumes that we are in some kind of a bear market. Now, the problem with this chart here is that it's a linear scale, right? So it goes from 100K to 200K to 300K. Let's actually look at a logarithmic scale. So where we don't increase by a fixed amount, but by a factor. That's this chart over here. So this chart and this chart is the exact same thing. The only difference is the scale here. And by using this, we can actually see why this strategy outperforms. We are avoiding those really extended bear markets, right? We are reducing our exposure to the token when we are going down that massively. That's what's actually happening with this strategy. Now, why did I take the 29-day exponential moving average? Why not the 20-day simple moving average or the 5-day exponential moving average? That's because I've run a simulation of buying and selling. So look at this. This is a very interesting result. This is the summary of more than 100 backtests, more than 100 simulations of buying and selling the IOTeX token. So what we see in black here, just for reference, is what we would have gotten if we just held IOTeX over this time period. This is no indication whatsoever that this will happen in the future again, right? That we'll continue to get 40% per annum simply by holding, but simply shown here as a comparison to the strategy of trading according to the simple moving average here in green or the exponential moving average here in red. So on the x-axis, we've got the duration of the moving average in days. So ranging from 1 day, which is basically just looking at yesterday's price, all the way to the 52-day moving average, simple or exponential. And so once we go above the 8-day moving averages, we pretty much outperform buying and holding the token. So it almost doesn't matter that much what kind of a moving average you take, as long as you take something that's not too short in duration. You still outperform just buying and holding. Being active in the market does pay off. Now there are several interesting moving averages that we could potentially use for trading, right? The best short-term simple moving average is the 13-day. Then we've got this point over here, which is slightly higher than the 13-day simple moving average. That's the 29-day exponential moving average. And then if you wanted to be somewhat more passive, you could take the 51-day simple moving average. For further analysis, in this video, I've simply taken the 29-day exponential moving average. That's the chart you see over here. So this outperformance over here is shown by this point over here. It is above buying and holding. So this, by the way, is the annualized return, right? Now let's also look for reference at the 51-day simple moving average. How does that look? So this is 29-day EMA. This is 51-day SMA. So I'm now toggling between the two. The SMA is slightly outperforming, not by much, but slightly. And one reason why I like the exponential moving average slightly more is because it is a bit more reactive, right? When we look, for example, at this decline over here, right, where we protected ourselves from this massive drop over here, it is slightly smaller for the exponential than for the EMA. So the less reactive you are, the more volatility you potentially endure. Now, on the other hand, the problem with very close moving averages, so let's plot the 29-day over here. The problem is that we sometimes get these failed signals. So let's look at this example here. You would have bought on the 1st of January 2022, right? We only trade at UTC midnight. So once per day, we don't trade within the day when the price just moves above and below the moving average. We just look at the price once per day. We would have bought over here and then we would have sold again over here. So that's not very nice. The same goes here for the 24th of December. We would have bought relatively high just in order to then sell for 12% lower. So one idea is to maybe have some kind of a buffer around this, right? Maybe let's only trade when the price really goes below this buffer or above the buffer to kind of ignore this noise, these bad trades, when we are very close to the moving average. And so I've done another backtest. I've basically ignored all of the noise around the moving average. I've tried to find out what kind of a minimum threshold above or below the moving average should we have to potentially outperform even further. Now here we've got the buffer analysis. So on the x-axis, we've got the buffer, and on the y-axis, again, the annualized return using the 29-day EMA. So this over here is a typo. This is supposed to be 29-day EMA. And we can see if we don't take any buffer, we get our 130% per annum roughly, right? That's this point over here. If we do include a buffer, so if we are less active, we do not gain any performance. One might argue maybe we can take 0.5% of a buffer, but this could also just be a random coincidence. So using this approach of ignoring these trading signals, at least for IoTeX, it does not work. For some cryptocurrencies, it actually does. So when you look at Bitcoin or Ethereum or some larger cryptocurrencies, a buffer of around 6 to 10% usually outperforms having no buffer at all. But for something that moves as drastically as IoTeX, that's not the case. So in other words, you have to live with these failed signals. You sometimes get in and out of the market without making much money, but it's better to sometimes trade like this than to ignore a signal and only buy when we are significantly above or below the exponential moving average. Now, of course, I haven't stopped there. Maybe it does make sense to make money when prices are falling, as in shorting IoTeX from time to time, right? So far, our backtest was simply just getting into cash during those moments in time. But maybe we should rather bet on falling prices over here and further enhance the return. So in order to find out if that's a viable strategy, I've looked at nothing but the negative trades, right? At nothing but the short trades. So again, in white, we've got the IoTeX price, and in red, we've got the trading performance if we bet on falling prices whenever the price is below the exponential moving average. So we can see sometimes we are in cash, sometimes we gain when the price is declining. So even with that strategy, we would have made money. So that's good, right? Everything above the zero line, or in this case, we started with 10,000 US dollars. Anything that goes up in this case is a great result. Why is it a great result? Because it really shows that this strategy works. Overall, IOTeX has increased in value, right? But by using the best moving average, we can distill the bearish times to a certain degree and make money solely by betting on those crashes at the right moment in time. And so let's now combine both of those strategies. So we want to be short and bet on falling prices when we are below the moving average, and we want to bet on rising prices when we are above the moving average. So now with this new strategy, we are never in cash. We are either buying IoTeX or we are betting on falling prices. So we always have either positive or negative exposure to the token. That's the end result. So in white, the IoTeX price, in red, both betting on rising and falling prices. And I find this very, very encouraging. This is again the 29-day exponential moving average without any buffer. We do have our little mini crashes as well, right? But over the long term, this is quite constantly appreciating. That's the power of the 29-day exponential moving average for IoTeX. Currently, by the way, we are above that moving average quite decisively, actually. Now, maybe this doesn't look as impressive here on this logarithmic scale, but look at this on a linear scale. This is what 10,000 US dollars would have resulted in, including trading fees, and in less than 4 years, right? So in white, we've got IoTeX. In red, we've got the trading strategy. We would now be at 1.5 million US starting from 10K. So this chart and this chart is the exact same thing, just a different scale on the left. Now, nobody knows how well the strategy will continue to work in the future. We can see a pretty consistent outperformance in the past, but as usual, past performance is no indication for future performance. But if you are using moving averages for IoTeX, if you consider trading actively, if this also doesn't hurt you, for example, when you're looking at taxes, right? Those have not been included in this backtest. If you are using a moving average, the 29 EMA, or alternatively, the 51-day SMA, they seem to work quite well for IoTeX. Now, maybe you could already tell from the design of those charts that this was done in Microsoft Excel. So there's an Excel sheet where you can change the average durations and you will get the return for IoTeX. You will get the updated charts over here. You can change the buffer value over here. You can change if you only want to go long, if you only want to go short, or if you want to do both. You can also change the gas fees, the exchange fee, all of that. Building such a backtest is quite a bit of work though. So if you want to download this, if you want to watch tutorials on how to build such a backtest, feel free to check out the premium membership. Currently for a slightly reduced price because of the bear market. If you decide to sign up for the entire year, you do get 2 months for free. So this is what you're getting. You get video tutorials on how to build these kind of backtests. You get the statistics library where you can download all of those backtests made on the channel. There's even a complete course on technical analysis and on technical indicators. And of course, we've got exclusive Telegram channels, for example, an alert channel that automatically messages whenever a statistically significant moving average has been crossed. So by the way, a little freebie over here. Cardano currently looks bullish. It just has crossed the 45-day simple moving average. Of course, there's also an exclusive chat. So if you want to get your favorite altcoin analyzed, feel free to simply post this over here and I will build the backtest. There's another public video on IoTeX. It discusses mainly relative valuations to other cryptocurrencies. It's quite different content. It's not just a repetition of what you've seen over here. So feel free to check that out. There's quite a bit of value there as well. See you in that video and thanks for watching this one. Bye-bye.